Hey everyone, this is Heather again, and this is going to be a quick introduction to moving averages, how we use them, why we use them, and why do they work so well. So moving averages are just, as the name implies, are moving averages of the price based on a specific period. So let's say the price moved up for 20 days, the moving average this point in time at this point in time is going to be an average of the last 20 candlestick bars, and that's going to be the moving average. Now that's all on how we calculate moving averages. Now how do we use moving averages? So there are two or three things that these moving averages are used for. The first one is they are used to find out the trend of the market or the trend of the stock. So when the moving averages have a positive slope or they are going up, then that means that the stock is in an uptrend. Similarly, when the moving averages are going down, that means, or when the moving averages has a negative slope, that means that the stock is officially in a downtrend. Let's see a few examples. So here we can see that the moving averages are going up. The slope of the moving averages is positive, so we are in an uptrend and the price keeps going up. Here we can see that the uptrend has broken, and now here at this point we can see that the moving averages are going down. When does the next trend change? You can see that here there are two moving averages here. The one closer to the price is the 20 moving average, and the one farther from the price is the 50 moving average. These are the most commonly used moving averages, but people use 200 day, 100, 61 1-day moving average, all kinds of moving averages. So these are the most common ones. That is why we are using these. So when you see here, you can see that the 20 moving average, the one closer to the price, actually goes above the 50 moving average. So we can say that now, since the smaller moving average has crossed the larger moving average, the trend has reversed again. Similarly, here you can see that right here, both of them had a negative slope, and the 20 moving average actually crossed below the 50 moving average. So now a downtrend had started. Now here we have started an uptrend again, and you can see that this uptrend actually goes from about 75 to, let's say, 130. So it was a long uptrend. So now why do we want to know about these uptrends and downtrends? Most often people want to always buy in an uptrend, and they want to sell in a downtrend, or they want to short in a downtrend, because if you are trying to buy in a downtrend, then your probability of success is sometimes low, because you have to know when the price is going to go back up, and sometimes or the price never goes back up again. So let's say we have a downtrend here, the price might not go back ever, because let's say there is something wrong with the company or the stock, and the price can just keep dropping. So you always want to buy in an uptrend, and you want to sell when the trend reverses and goes down. If you are shorting a stock, then, or if you are bearish on a stock, then you want to short in a downtrend, and as long as a new uptrend emerges, you want to just get out of your position. This is how we use moving averages. Another great way of using of why the moving averages are so good is because moving averages can act as dynamic support and resistance levels. So you can see that the 50 moving average price dipped down. Where did it dip down? It dipped down right on the 50 moving average. You can see here as well, for many days the price dipped down on the 50 moving average, and finally it broke the 50 moving average, and then very soon you can see that there is give me a minute, you can see there is a sort of a consolidation here. It's not an uptrend, it's not a downtrend, it's flat price action, and you also don't want to go in a flat price action. So the rule of thumb, especially for totally new traders, is that you always want to buy in an uptrend, and then you want to short or sell in a downtrend. So just remember that. With some time, you'll realize so many things about these moving averages, and you will find tons of tips and tricks on how to best use them. But for right now, we are trying to keep it simple. If you're using Tradetics and you want to change the 20 and 50 moving average to something else, you can just go here and change the moving average size. Let's see, we set the 51 to 100, and you can see that now. And here I was talking about these acting as supports. So you can see that the price came about here, went back up, came about here, went back up, came about here, and went back up. So these moving averages, sometimes the most common ones, 20, 50, 100, 200, act as really good support and resistance levels. That is all. That is it for this video. I am not, yeah, I don't have anything else to say about moving averages, so we will move to the next video. Thank you so much for watching it. If you have any questions, leave it in the comments below.